Hello. So I'm making this video to say that I think we've hit the market bottom, at least for a lot of stocks, especially small market cap stocks that have been down between 50 and 80%. I think Tesla, as well as a larger company that I've personally been investing in. And the reason is a couple things. One, the I think the first foremost driver that's going to be reversing our current trajectory is the COVID numbers have significantly dropped off from their peaks and deflected downwards. That's on the US national scale. So the rate of new cases has dropped down significantly to pre-November levels. So Omicron, as I at that time suspected, hasn't had been as significant as the media assumed in the worst case scenarios. And this was indicative of some of the early data from South Africa that suggested that it might have been a more contagious virus, but also a less deadly one. So that's the biggest factor, I think, and that I think will loosen up some of the prices for what companies are maybe how they're elevating prices, because it's gonna dampen fears of future supply chain issues that propagated some of the issues during the original supply chain bottlenecks from COVID and shutdowns before. So I think now that shutdowns are mostly averted, it will help solve some of the inflation issues with CPI data, because the prices will decrease. And I think maybe companies are forecasting any potential shutdowns so that they have elevated prices to compensate. So obviously the positive news in general has been great earnings from companies. The unemployment rate is decreasing, which necessarily isn't always a good stock market result, because regarding potential monetary policy with the Federal Reserve, which may look at this as an indicator to be more willing to increase rate hikes due to a strong economy. But I think in general, you can't argue with having a strong economy, and I believe that it would be a worse outcome if it was a different circumstance regarding things like GDP, which has grown 6%, or unemployment figures, which are lagging. So it's good that unemployment's good in terms of a lower number. GDP is good, 6% growth year over year. And then also the other circumstances with companies reporting great earnings, which I suspected they would. Tesla reported blowout earnings. So I think, and many other companies obviously as well. And I keep bringing Tesla up because I think, I'm looking at, obviously there's some other great videos online from people like Financial Education, who the person named Jeremy, or Meet Kevin, and Millennial Money. A lot of great content from them. But Jeremy, in one of his recent videos, was talking about the PE ratios of companies and where they're at relative to where they normally are. Like if Facebook was under a 20 PE ratio now, in terms of how their evaluation is looking. So I think that, as long as any crisis is averted in Russia, all of this fear has already been priced in. And as long as we're not getting any meteors falling or continuous bad news, which is always very possible. I mean, it's always hard to predict what's around the corner. We had Evergrande from China with the real estate circumstances, obviously the Omicron thing. But now that we're going into spring, I mean, it's obviously, at least we got the virus stuff out of the way, which was the biggest thing. And I think that was, again, very impactful in terms of inflation, in terms of the CPI, in terms of all of that, especially in the car industry, how they've reported that those shutdowns have caused propped up issues in some ways in a more scathing sense than even more scathingly than in other industries, because cars rely on so many small parts, thousands of parts go into the vehicles, and if any one distributor has a shutdown or is not able to commence production to fulfill their orders, then it'll cause a lot of problems across the industry, which is also kind of like shows the inefficiencies of the auto industry as it stands today. And then this is again a separate point I'm going towards, but like Tesla, for instance, and other companies are more recently adopting the strategy of gigapresses, which are more singular car units that are pressed with less smaller parts required. So definitely kind of a little bit eye-opening about how inefficient, like requiring thousands of parts from many different distributors, kind of like almost kind of a silly process that currently exists in the legacy automaker industry. So anyway, yeah, so I think we're potentially reaching a bottom, or I think actually have reached the bottom, and anything's possible, but it looks like things will, at the very least, there's definitely potential for continued volatility, but it looks like this is the floor level and we're gonna be bouncing from here. Hopefully much quicker up on the upward trajectory. There definitely will be probably some future stagnation or future downward trends again in March during the next Fed meetings to determine how the interest rates will be looking.